Today I'm going to discuss the topic running Musharakah. Running Musharakah is actually an Islamic banking product basically, but there are some issues, and because you are now at postgraduate level students, and so it is very useful to discuss this topic with you. And at this stage, you will find that what are the issues in Islamic banking and finance on product design and structure. A few years back, initially, Mizan Bank started this product, running Musharakah, and it is actually running Musharakah is alternate of conventional product, and that conventional product is called running finance. Running finance facility that was being provided by conventional banks. So then the Sharia advisors of Mizan Bank introduced Islamic alternate of this product, running finance. So this is, let's see here that what is the background of running Musharakah. So look at that. To meet the working capital needs of the corporate client, usually conventional bank fix a certain limit of loan which client can withdraw at once or as and when needed basis. Because the client is sanctioned a limit, and then in various different intervals client withdraw money as he needs. जब जब उसे जरूरत पड़ती है वो पैसे निकलवाता रहता है. Under this facility, client is also allowed to deposit back the amount when client has money. जब उसके पास पैसा होता है तो वो कुछ पैसा जमा भी करवा देता है. And it continues till maturity of the facility. और ये सिलसिला रनिंग फाइनेंस की जो मुद्दत दी जाती है उसके आखिर तक ये फाइनेंस, ये फैसिलिटी जो है आखिरी मुद्दत तक उसकी जारी रहती है. The client pays interest, KIBOR, only on the amount the client has used from the limit rather than paying on complete limit that was initially sanctioned. For example, if Islamic bank sanctioned 10 million rupee or the conventional bank sanctioned 10 million rupee to the client, then it is not that the client will pay interest upon the complete sanctioned 10 million rupee. No. As and when needed basis, he used the amount. That amount will be considered as his investment. Let me discuss here that conventional bank gave the facility of 100 million. This is sanctioned limit. This is sanctioned limit to the client from the conventional bank, and the tenure, let's say facility tenure is 1 year, and they decided KIBOR, let's assume that is 14%. 14% KIBOR. Now, 1, 2, 3. $12 months. These are the months, let's say. In the first month, he withdraw 2 million. 2 million. Then he withdraw 3 million. Next, okay. Next, he deposited. We call it here withdrawals and deposited. And next month, he also withdrew 2 million, but he also in 1 million deposited. Here, no withdrawal, but deposited. Then fifth month, 4 million, 6 million, 7 million, 12 million. Then again, 6 million deposited. Then 15 million. And then 2 million. Let's assume this is the transaction. The client, corporate client, has withdrawn this money. Let's assume what is the total of this one. By the end of the running finance, okay, 61 million. And here 9 million. So this 9 million he deposited, and this 61 million he withdraws. So how much money he has used? It is this one minus, because he has paid back this one. So 52 million is the amount the client has used. So now how much interest he will pay? Interest payable is equal to this one, 14% into 52 million. So the 7.2 million is interest payable. This is the way this is running finance. This KIBOR is called overdraft rate. Overdraft rate. And because he withdrawal money with different in different intervals, so that is why this is known as overdraft facility. That he will withdraw money in different times, and he will deposit. So this is known as overdraft, and this KIBOR rate is known as overdraft rate. So this is running finance. So this product is basically offered by conventional bank to the corporate clients. Corporate clients mean the clients who needs money for their working capital, for their businesses, factory owners, industrialists. They need their money. They need the money to meet their working capital need.